Before I start any video, I want to give a big shout out to my coach because it's not easy to find a forex trader that can teach you very well to understand. So I always give a big thank you to him for guiding me through the whole process. So today's topic is order block or a fair value gap, which is the best for entry. Many of us, you see, I'm a victim of this thing. So whatever I'm showing you here is what I have been through or what I was still going through and I'm still struggling with every time. But it became more easier for me when I understood this scope I'm about to show you and became more calmer for me. Now I'm going to show you the first step as a day trader. Now this is a zone, right? Day traders usually start from 1 day, but majority of the time is always 4 hours, sometimes 1 hour, then last bus stop is 15 minutes. While scalpers is 1 hour, 15 minutes, and 5 minutes or 1 minute. Now this is a zone, right? On 4 hours chart. If I put my line here, there was no what a break of structure here, but we have a swing high indicating what a mitigation block. So for me, I always use line. Don't get confused. I always use line here. This line has indicated for me that if market gets this zone, there's going to be a source of reaction. So I put here, this is my other block, right? Because there's what an imbalance. Don't forget the video I did previously for an imbalance. We have an other block here, and you see a liquidity void here. If I draw my Fibonacci from the high to the low, I take 50%. I just mark all the areas I believe markets will come and react, and I put a line there. These are zones I believe markets are likely to react in. Then I can come down to 1 hour. Don't forget also your Fibonacci, just to remind you the difference between your premium and your discount. So all the zones I marked here, they are under my discount because it's a buy trend for 4 hours. Then if I come down to my 1 hour, on my 1 hour, I can take here as my mitigation block, also close to the liquidity void, right? Some people do counter trend. They can take it from here and sell it down. They can take an entry from here and sell down as a sell, since there's already a change of character here on 1 hour for those who counter trend. But for me, I'm not really good in counter trending. So don't forget that this line here is from our liquidity void from 4 hours. So I'm expecting market to act very, very funny there. Now I've refined that 4 hour zone because I want to enter on the 4 hours chart, but I want my stop loss to be lower as a day trader. Now if you can see this here, you can see this for those that are counter trending. If you want to counter trend, you can see that there was also what a breaker block on 5 minutes. This is a zone we marked from 1 hour. You can see those counter trending would have entered a trade from here, marking the shift of structure here, and what there's an entry here. I want to show an example here. Now this is the liquidity void from 4 hours. You can make profit from everything. Now you can see here there was a shift in market structure here, and what market reacted there to the upside, also in a bullish momentum. Let us see what happens there. You have refined your stop loss. Right? But we know that market still has to come and take out all this liquidity here. Market has to come and take out all the liquidity down here, because these are liquidities where I believe market will come to. But imagine you are refined your entry, because if you had used your 4 hour zone, I hope it's very explanatory for you. You would have seen that it's very funny here, right? But you can see here, this was what the mitigation zone of 4 hours, but you refined it down to 15 minutes, right? Market got there, and what happened? Market shifted structure here. Market took external liquidity here and shifted structure here. You can see it, right? Now if you take your entry here and stick here as your form of entry, but don't forget Fibonacci should be your friend. High to the low. Your breaker block should touch the Fibonacci 50% to make it a valid trade. Then you can enter the trade. That way it's more easier for you. Your breaker block, and you can see you can target here. Why are you targeting here? That's the question you should be asking. Why am I targeting here? I'm targeting here because I believe before markets can take out this zone, this one up here, all the liquidity down here should have been filled up. That is my assumption. Mike cannot leave his food. I call it food. Mike cannot leave his food and start going in another like going like without collecting the whole food. So I will still wait because why? There is a break of structure here on 4 hours. There is another block here, also another block which market came and took in the internal liquidity. But let's watch. I haven't back tested this market at all, but I'm just putting it out for you to see what market wants to do. And you can see it took out what the external liquidity. So what we can see here is that market reacted where at the mitigation block. All these lines, here is an order, here is an order, and here is an order. Are you with me? This whole place and orders market can come and take trade in. This for those that are day trading. This for those that are day trading. Are you with me? Now look at now market came here, but you can see now many of us would have marked here as what? As what? An order block. But this is a weak order block. Why is it a weak order block? Because there is no fair value go up or an imbalance. Now let us watch again. Market is still playing what? Market is still playing its game around where? Around the same mitigation block. Around the same mitigation block. Using here as a form of liquidity. It's creating liquidity for us on 4 hours chart. Creating liquidity for us. But if you look here, there was a shift in market structure. Market is very funny. There was a shift in market structure, right? Am I correct? Yes, I'm correct. There's a shift in market structure. What again do we have here? I have our fair value gap here. I have a mitigation block here. This area, all these areas are entry zone, breaker block, mitigation block, fair value gap, other block ahead of here. And you can see market getting in those areas and reacting. Mitigation block, market reacted, came down. The same breakup block area reacted, came down. And market went to go and take out liquidity in the fair value gap. We go down to 15 minutes. On 15 minutes, what do we see? 15-minute chart, we see that what? There was a change in character twice. And what happened? Shift in market structure. And let's see what happens. I will target here as my TP. Let's see. I'm watching the chart. Let's see. Let's see. You can see it, guys. Can you see it yourself? Okay. You can see it yourself, right? That'll be my TP. And why did I put as my TP? Because it created liquidity here on 4 hours. This on 4 hours, market created liquidity. You can see the liquidity created. This what? This is what? Double top. I said double top. Equal low. Sorry, equal low. The market came and took out. Liquidity has been taken out. Is going for internal liquidity, which I'll put my line here as a fair value gap, but not to confuse you. Market will react in that area and pull down. But we know that it is still a what? A bullish momentum, because there was what? A shift in market structure here and a break of structure. There's also a break of structure here, but it's still playing around the liquidity zone. But I'll take it as a bearish momentum because the shift in market structure here and other block here. There's a fair value gap inside here. Let me delete this line. There's a fair value gap inside here. Well, let me use this one. If you can see it, to signal a good order block. There's a fair value gap inside here. You can see that, right? You can see that, right? There's a fair value gap in that inside here. And what happened? The overall trend, there was a shift in market structure here. It came out with a body, not a wick, with a body, and market keep doing his thing. Do you see that? Even down to the other block here as my zone, I have to go down to 15 minutes again. On 15 minutes zone, you can see what it did to my other block. It shifted market structure here. This is how we get a refined entry and a lower stop loss. And what happened? You mark your zone here, and what do you see? You see a good buy. Like, you can't come down to your 4 hours, but you can check it on 15 minutes. What was in that zone area? To me, this is what I do. I go on 15 minutes to see what was in that area that market reacted to. I can see here in that zone area, I can see what? I can see a breaker. I can see a breaker. If I go to 1 hour, 15 minutes, there's a breaker. You can see market reacted exactly at that breaker at 15 minutes. And you can target all these zones as your TP1, all these zones as your TP2, and you're good to go. TP1 hits. I keep going since you know that on 4 hours, market has to what? Sweep out this liquidity. But I will stop here as my TP1 and I'll play around this zone till it gets to the 50% of the liquidity void. You can do that for 1 day, you can do it for 1 week, you can do it for 1 hour, depending on your entry. As a swing trader, I start with 1 week sometimes. Then I use my PD array, shift in market structure. I do my other block here, which has warned me that the whole market is what a bearish momentum is shaking around here. I try to mark out all the liquidity zones. I feel that there's no liquidity there, but there's liquidity around here on 1 week. What again here? Nothing. I come down to 1 day. On 1 day, what am I seeing? There's a break of structure here. This is an order block. Market has not broken here at all. So this is all liquidity being created on 1 day. You can see that order block, liquidity being created on 1 day. Then what again am I seeing? Break of structure, liquidity. Is it a fair value gap? No. Is it mitigation block? No. But the shift in market structure here. So I'll go down again to a lower time frame to see why it reacted there. Okay, another order block. This is how you be marking it, refining and refining and refining and refining to be able to get a reason why market reacted there. And if you keep playing on 4 hours, you keep playing on 4 hours until market breaks this 1 day down here, you know that the market has changed trend entirely. Do you understand? The market has changed trend entirely, and you see this is an amazing buy. You can see that, right? That is from 1 day zone. We refined this zone that we took entry in. We refined and refined and refined and refined and refined, and we got an amazing zone. This would have been our stop loss, but we would have still refined it because we took a I was taking a trade down to maybe 1 hour or 15 minutes, and I will still keep refining, and my entry would have been around here. My entry will be around here, and my stop loss will be here. This is just how refinement works, and I'll target 4 hours as my TP, and I'm good to go. And you see some people say, oh, I had a trade of 1 to 5 or 260 pips, 261 pips, and this is how you do it. So for those that are swinging, can start from 1 week, 1 month, or 1 day, 4 hours entry, or 1 hour entry to refine and get a lower stop loss. Don't forget to subscribe, and I hope this video was impactful, and I hope you gained some value from it. Thank you.